Multi-Asset is a global funding specialist for clients with energy assets. Farzad Moshfeghi is a founding member of the company and a senior consultant there as well. Hello there.
Hello, Charlotte.
Thanks for joining us today. Now, Farzad, to start with, can you tell us about the three different branches of the company? You have consulting, private equity and project finance operations. Tell us more.
Well, start off with project finance, which is the easiest. It's looking at projects that have met most of the milestones needed to raise debt, so we can work with a number of different sources of data, of funding, such as credit funds or structuring desks of certain investment banks, or certain off-takers with products that meet the needs of someone looking for debt. On the other hand, if a company comes to us and they're not quite ready for debt, but they need equity, we're finding quite a lot of private equity players in that space looking to take a long-term view and wanting to enter the energy space. And so we help with bringing and preparing people for what a private equity fund may be looking for. And then on the consulting side, where we found some of the companies who are perhaps less familiar with what the investment cycle requires, they won't necessarily have everything that's required. Either their presentation material is lacking, or they may have incorrect valuations. So we help them correct those or put together a presentation case that promotes their projects and allows them to go in front of an investor base, knowing full well what they're about to be asked.
Okay. Now, given the current low oil price environment, as we all know, it's difficult, especially for junior oil and gas companies to raise money on equity markets. Have you seen a change in how these companies raise money these days? Are they turning a bit more inventive?
Well, I think it's an interesting space. I mean, there's no real answer here. There's an awful lot of it is to do with the long-term view of this space. So if you're looking at a junior company, if they have always had a cornerstone investor, then it makes sense for these companies in these times to look at their spend profile, maybe look at the way in which they initially targeted their milestones, and perhaps review that as a starting point. If this is not the market to raise money, then you may need to decelerate your process if you can. Alternative is if you don't have that freedom, then you're going to have to look for sources of funding that perhaps haven't been tapped in before. For example, looking at services for equity as opposed to straight cash equity, or looking for partners who were not perhaps EPC before and wanting to get into the EPC space. These typically are harder to achieve, but there is money out there. There's a huge amount of money out there, and it's looking for a home. What we find at the moment is that a lot of the projects just don't fit the profile that money is looking for. And
would you say it's in these companies' interest to consider having a larger base of shareholders to support their long-term development? Or more diversified, let's say, base of shareholders and investors?
I think it's a good question. I think the shareholder is always looking for the same thing, a return on their investment. Some shareholders, for example, you may have an off-taker as a shareholder. The off-taker is looking for you to produce oil. They're not necessarily looking for the IRR, they want the oil. So their appetite for risk may be different to someone who's just looking for financial gain. So it's wise to look at your shareholder base and really approach this sensibly. Choose the right shareholder that meets the risk profile of your project. If you take on a shareholder who has, let's say, a medium-sized part of your company, and suddenly they need to offload, it's going to kill your company's valuation, because the market may not be ready and they'll sell at huge discounts and completely mess the share profile of the company. So it's important to have shareholders that have a common goal and a common understanding, and so they they don't necessarily get spooked by something that happens.
Now, Farzad, earlier you mentioned that to attract investors, you have to help companies prepare for the fundraising process, if you wish. And you are a global company, and that means that every company has a different culture, and the jurisdiction where they operate also has a different culture. Can you tell us more about how you help them for that?
Yes, I mean, our client base is very global. So we may find clients coming at us from, for example, let's say North America, fully prepped for what's expected of them. They've been through the cycle a number of times, either as participants themselves or as players within a game. And so they are very well prepared. They provide us with an investment pack that really just needs a little bit of tweaking and maybe a little tidy up. But usually the cash models are accurate, the valuation is on an appropriate price deck, and we have very little to change. On the other hand, if this is the first rodeo for that client, or if they've previously had no access to Western style of funding, where the investors are sophisticated and require appropriate business cases, really, then we have to look at those projects. We review their cash models, we review their reserve reports, we assess the validity of the development plan accordingly. And historically, we've had to go back and change a number of these attributes, mostly because there's too many assumptions, and assumptions that we know investors won't accept. We have to go back to the drawing board, look at the price decks, look at the valuations, and really manage the expectation of the client. I always find that the first time I have this conversation with those types of clients, they're a bit taken aback, but it doesn't take them long to see the sense, because we're here to help them. We're here to make them succeed. We don't eat unless we succeed. So it's only in my own benefit to make sure my client is ready for investment. And once they appreciate that we're actually looking after their interest, they typically cooperate.
Okay. Yeah, sometimes you have to be cruel to be kind, I suppose.
Yeah, truth is sometimes a little hurtful.
Yeah. Risk appetite amongst investors, what's it like currently?
Yeah, it's interesting. For the last 6 months, all we've heard is people saying, I don't want to spend money on exploration. I want to reduce my drilling program because drilling is, CapEx is not the right time to be increasing CapEx. And then just recently now, because as a byproduct of the reduction in investment in CapEx costs have come down. Drilling rigs cost less. Contracting companies have reduced their rates. We've seen a 35% decline in the operating costs. Some companies even greater. Some I've seen them reduce their operating base down as much as 60%. So is this a bad thing? No, I think these companies are stronger. Those who have managed to bring their cost base down face a much better future going forward. And whenever you see a project that in these climates is not viable, then it just isn't viable. If you've started, then you have to finish.
Yeah.
This is the issue. So some projects have no choice but to continue. But what we've seen is that those who are in a development program have stripped back to the bare minimum, so that they're drilling the least amount at this stage, waiting for things to materialize. And then in the middle of all of this, recently we met with a group of professionals who have their own funding, who basically turned my view upside down. All they want to do is explore. And I think this is
It's quite unusual indeed, and
I think it's
evolution.
evolution.
Almost.
Yeah, it's an evolution. Since the drilling rates have come down so much, they recognize that if you're going to explore, this is probably the cheapest time to do it, because when the prices recover, if they're going to recover, of course, then having done your exploration during the cheapest period, you reap the benefits when others are having to pay much higher costs. So it's interesting to see that there is still a fairly diverse view of the space. I think it also has to do with how much funding you have. So if you're a sophisticated investor with geophysical knowledge, you're much more likely to appreciate that you can spend that money wisely in an exploration project. Whereas, of course, if you're just a financial investor, you're going to be spooked by the risks associated with exploration.
Lastly, Farzad, for a company like yours involved in funding, coming to an event like the World Oil and Gas Week is key to expand your network, isn't it?
Absolutely. It provides us with a platform for improving our clients' awareness of our brand, and also associating us with events like this is a way of making people more comfortable with who we are and what we do. So we've been attending since for a couple of years now, and we'll continue to attend. And we always exhibit here, so it's a great place to be.
Okay, well, thank you very much for talking to us today.
It's been a pleasure. Thank you.
Thank you, Farzad. Farzad Moshfeghi, a founding member of Finity Asset.